welcome back. In this video, we're going to talk about some of the benefits and considerations that firms should be making if they are participating in the space economy or space adjacent technology startups, and how investment crowdfunding is probably something that's right for you. The first thing to consider is to know and be upfront about the fact that there are only so many funding sources available, and only had so many funding sources available for quite some time now. You've got, oh, you have a question over there?
Yeah, I do have a question over there.
Oh, okay, sorry.
So suppose I'm an early stage startup in space and I go to a bank. How do I get money from a bank?
Hope and pray.
Oh, that is a methodology.
That's a short answer. No, as a former banker, she'd be better answering that. They're going to want to see your business plans. They're going to probably want you, if you really are a fresh startup with a fresh technology idea, they're probably going to want you to secure everything in your own name, right? So your house, any 401k assets you have, anything like that. So that's what the bank's going to do, and that's assuming that they fund you. So that's number one.
Excellent. Number one, the banks want you to be personally liable for any money they may give you, which means you have a 90+% chance of losing your house and your 401k. It's a great way to build your life savings. So that's option number one for funding, because we do want to cover all of the funding options. So, all right, George.
Number two.
What do you think number two is?
For me, it is having a rich uncle like Scrooge McDuck.
Oh, DuckTales. Ooh.
Yep. They relaunched DuckTales, by the way.
Yeah, the original is better than
it's way better. I've showed the kids the original. They like it better. So anyway, the other one's the rich uncle. And very few of us have it. So it's probably not super worth going into very much. But if you have that relative that can just write you a check for $1 billion so that you can turn it into 100 million. Yes, that was on purpose what I did there. Then great, that'll work for you.
So it is very true. All investing is very risky, or comes with risk. So if someone writes you $1 billion, you might return to them 100 million. That's actually not the worst exit in the world, because sometimes you end up like Quibi, where you have $2 billion raised and 6 months later you're out of business. So the bank is your first option. Your rich uncle, auntie, also colloquially known as angel investors. George has some very particular feelings about angel investors. George, how do you feel about angel investors?
I feel like words matter, and I feel like it was brilliant for them to call themselves angels, because if we actually called them demon investors, then no one would take their money. And so I'm sure that some of my friends who are angel investors are going to hate me saying this, and this doesn't apply to them. It doesn't apply to them. The people who this applies to know who you are. But yeah, I mean, by and large, they're not angels. It's just a brilliant piece of marketing. Brilliant marketing to call yourself an angel when you're a demon.
That is true. That is true. I like to say, I don't call them demons per se. I call them sharks, because technically the sharks on Shark Tanks, they're also angel investors. The average check that the sharks actually write is less than $500,000, because if they're going to write you a check for $500,000 and you're an early stage startup, Mr. Wonderful wants your entire business for that $500,000. So that I don't call them angels. I just call them sharks. And whenever you go to dinner with sharks, you are on the menu. So now that we've covered banks, rich uncles, aunties, VCs, angels, what's our third option? Our fourth option, we're going to skip factoring. Factoring is another great way to, get a haircut on all of your money, but we'll skip that for the moment, and we'll skip blood banks, donating kidneys, etc. Those are options, but we don't want to consider them, which leads us and brings us to the point of this is equity/investment crowdfunding. George, tell us why equity/investment crowdfunding might be right for businesses that are in the space vertical.
I think for businesses that are in the space and space technology adjacent vertical, it makes a lot of sense, because particularly right now, you have a lot of enthusiasm around space. There's a lot of conversations around the need for space technological advancement. They're coming from all levels of the government, all levels of the private sector, where we know that we're in a space race right now. That space race is obviously between the US and China, but also between firms. It's not just a nation space race, it's a commercial space race.
Give India a shout out, because I just can't let you say in the US and China without mentioning India, but continue.
And you know I'm a fan. You know I'm a fan. And so I would say that when you look at that level of enthusiasm and that level of following that's happening, that presents an opportunity to itself to engage with that crowd. If you are a new or newer space company and you're looking to do your first raise of, let's say, $1 million to get to a MVP or a beta of your product, your good, your service, then you right now have a pretty engaged and enthusiastic group of people looking at space technologies, and you can talk to them about the opportunity that your technology presents for space, how it's going to work, how it's going to help the space industry, how it's going to move the space economy forward, not just the space industry forward. And people are ready for this right now, and it just happens to be happening at the same time that the rules and the financial mechanisms have changed to allow for this. You brought up a good point. I don't want to go on a tirade. I don't want to go off your question here, but
What's the point? Then we'll make a new video about it. Just quickly, what's the point?
so the point is what you just mentioned about the average angel was 500K, right? If the average angel was 500K, but you can now go out with a reg investment raise and as of March 15th, get up to 5 million, that's going to move the ecosystem, right? So the competition for dollars in that previous range, which was the sweet spot of angels, is now going to be competing against the crowd, and the crowd will price based on different methodology because everyone in the crowd's participating, right? Everyone's vetting. You have, 2,000 underwriters because you have 2,000 people seeing if they want to put their $1,000 in. So it's going to change that environment.
We're going to put a pin on that. I'm going to go fact check myself because the average check that an angel actually writes is around 20K. The average deal that they're investing in is around $500,000. I'm going to fact check myself that because remember, to be an accredited, sophisticated investor, you need to make more than $200,000 a year or have more than $1 million in assets. So if you're making $200,000 a year, you're not writing $500,000 checks, but you might be writing $20,000 checks. So we're going to fact check ourselves on that and come back. And in our next video, I'm going to ask George a super tough question, such as, why is crowdfunding better than venture capital? Stay tuned. We'll be right back.